Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Matthew Jellicoe of One Planet Capital to talk about their SEIS Climate Change Fund. Hello Matthew, welcome to the studio. So we're here to talk about the SEIS Climate Change Fund. Firstly, what is it? What makes it different, and why should investors consider it?
Well, there's a few questions there to answer. So first of all, the fund is it's an SEIS fund that will invest in 10 to 15 companies per tranche. Every company will have an impact on climate change or the environmental issues of the day. It's a really good opportunity for investors to marry up really strong growth potential with impact in one of the most existential problems of the day.
And so it's potentially an opportunity for investors to have real impact from their capital. Is that right?
Yeah, of course. Yeah, I mean, obviously, we invest in businesses that have big environmental impact, big impact on emissions and climate change. But also at the same time, it's a hugely growing sector. So there's massive commercial growth, very well supported by government. It's one of the meta trends of the day, really. I mean, I suppose if you think of the huge meta trends that are going to govern the next 30 years, you're probably talking about climate tech and AI, and we tend to see actually a fusion of both in our sector. So a really good investment area.
So Matthew, as you've mentioned, this is a relatively new sector. What would you say are the key drivers that are really driving interest and adoption in sort of climate tech technologies?
Yeah, sure, Jonathan. So I guess, the main one is regulatory. So, we're all aware of the laws that are coming in the UK regarding net zero and cars and everything else, but that's happening globally simultaneously, almost everywhere. So, there's big lines in the sand regarding regulation. So, for example, if you're in the maritime space, emissions have to drop by certain dates moving forward, and this is happening all over the place. So, this regulatory environment is really, really important to what we do, and it's a big driver. Outside of that, you've got consumer awareness in the background, which again is very, very important. You've got big corporates responding to both the regulatory and the consumer awareness and moving very quickly to net zero. I think, for example, now 85% or so of emissions are now, under some kind of net zero framework within the corporate world, for example. And then the other thing that's really important is decreasing technological costs. So a lot of the kind of, for example, in areas like solar, what we're seeing is costs coming down all the time. Same with wind energy. That's kind of happening across the board. So you've got this perfect storm, if you like, of drivers, which is making climate tech really come to fruition now. And I guess the other thing to say is that really good climate tech innovation isn't about emissions per se. It's about doing things more cheaply whilst decreasing emissions. And in general, moving forward in that direction, it has to be a bit of a no-brainer. Good climate tech is a no-brainer for the people who adopt it.
That's very interesting. And so for those who aren't familiar, One Planet Capital, could you give us some background to One Planet and your role there?
Sure. So we founded One Planet Capital about 4 years ago now. My journey into climate tech probably wasn't as typical as some, in that I'd worked in one of the big internet bookmakers since about 2001. I'd seen that company grow from a startup to a unicorn, so seen that kind of explosive growth and been there right at the beginning. I guess that experience stayed with me, and I founded a couple of B2B SaaS businesses in that space, which I exited. And then from 2012 became a very active angel investor. That angel investing kind of began with technology and gradually moved into climate tech, because I kind of saw another industry doing the same thing. Out of that angel investing activity also, Ed Stevens and Anthony Chant came on board into the fund. So the three of us run it. We're all similar backgrounds, and we're all exited entrepreneurs. Anthony more from a PE-backed environment. But I guess the two lessons there were, one is I'd spent a lot of time in an industry which perhaps wasn't the most socially productive. So I guess when we did One Planet Capital, that was one of the premises of it, wanting to do something valuable. And secondly, I'd really seen an industry come out of nowhere, right at the beginning in terms of the internet gaming industry, and that's where climate tech is today. So when I go to the climate tech conferences, in London, at Earl's Court and so on and so forth, that same environment is there. You know, startups just starting at the beginning of a huge industry, and I think that's what the next 30 years is for this industry. Yeah.
Oh, very interesting. And I think what's interesting about One Planet is it's three entrepreneurs essentially that have come together with a passion for this sector, essentially extending their angel investing track record into a fund.
Yeah, exactly.
So what sort of companies are you looking to back? And are there any criteria that you need to hit to back these companies?
The first thing is that climate tech is a vast space. So we're talking about businesses which impact energy systems, the way we move goods, and the way we live in general in terms of built environment. So it's a very big, it's a big sector which is getting bigger all the time. So within that, we're quite focused on a few, pillars, if you like. We don't do consumer at all, so we're purely B2B. And within a typical portfolio, you'd expect 30% of businesses to be around software. And by software, I mean B2B SaaS, AI, or data as a service, something like that. The remaining businesses are likely to be in energy technology, things like grid tech, manufacturing, engineering, transport, or built environment. So the general portfolio will give you quite good diversification across a number of pillars, if you like.
And how many companies typically would an investor expect?
I believe we did 12 in the last SEIS tranche. The target is sort of, is always between 10 and 15, but I imagine 15 would be the more accurate number.
Okay. And how do you find these companies?
Yeah, good question. So obviously we've been around for a few years now, so increasingly it's direct. I think about 25% of our leads will come from direct applications now. Probably another 25% come from Innovate, because we're an Innovate grant partner.
That's Innovate UK.
Yeah, Innovate UK. So, and that's actually a really important point, because the other thing to sort of make clear is that a lot of our businesses get grant funding, which is really good for investors in general, because obviously it's not dilutive. So so 25% direct, 25% via Innovate, and then I guess the rest will come from a mix of venture builders, incubators, universities, obviously. So we're getting a lot of university spin-outs from Oxford, Cambridge, Edinburgh, and also the Set Squared kind of portfolio, which is Southampton, Bath and Bristol. So that's the general mix, and of course co-investing will be the last bit, because we co-invest usually with other funds. I think the climate tech space is perhaps a little bit more collegiate than some others, in that we're all working towards a common goal in some way. Yeah.
And to what extent do you get involved in some of these companies? I imagine if you're a startup founder in this space, a team of three entrepreneurs with a clear passion for this sector, it's probably quite appealing for lots of founders.
Yeah, it is. I mean, we do have to be selective in terms of taking board seats, because obviously we don't want to spread ourselves too thin. But I would say with SEIS companies, the main danger with an SEIS company is that they will have issues raising their next fund, because usually they're doing a relatively confined raise for SEIS. So the most important thing will be to help them with their next raise. So I would say it was kind of light touch mentoring, but really supporting them with the next raise. And obviously what we're doing is we're taking a few of those high performing companies and supporting them through with the EIS fund.
So could you talk us through a few recent investments you've made in the fund?
Sure. So with the SEIS fund recently, a few investments would be a company called XWorks, which is in the recycling space. So XWorks is a digital platform that allows recyclers to operate within regulated industries. In other words, they have a blockchain certification, so that there's a certified, if you like, data path with each recycling deal that's done. Yeah. So this is very important for forthcoming EU regulation, for example. I mean, XWorks was an unusual SEIS investment in that the company's already profitable. So it was already profitable, but it still has never used SEIS. So in that case, we were able to go into a profitable business. Another good example would be a business called Raft Energy. So Raft Energy have a technology for massively increasing methane production within biogas refineries. So there's biogas is a huge industry in Europe and the States, of course. It's growing very, very quickly, and Raft's technology would increase methane production within those refineries by 70%, for example. So again, it's a really great technology with great prospects out of it.
Oh, very interesting. And it's probably too early to look back at some of the more established names in the SEI's fund, given it launched last year. If we look at some of the more established names in the wider One Planet Capital portfolio, any highlights there? Anything that's done particularly well?
Well, it's a really good point, Jonathan. I mean, one thing about the space that we're in is it's quite young, full stop. So most of the companies in the climate tech space will be 5 years old or less. In reality, that's how new the industry is. But in terms of our own portfolio and businesses that are doing well, so I sit on the board of Rad Propulsion, which is one of my sort of favourite businesses. It's a marine EV business in Southampton. Second-time founders, already had a really great exit behind them. The company's doing really well, great engineering team, and that's now moving towards a 30 million raise early next year, for example, and has a really interesting prospects ahead of it. Another business that is based in Bath, part of the Set Squared group that I mentioned before, is a business called Kelpie, which is in the bioplastic space. So this again is a vast market moving forward. The use of plastics in food and that kind of thing, it will disappear within the next 5 or 6 years to be replaced by things like bioplastics. And Kelpie has an amazing cap table now to take it forward. So this is a huge market opportunity for them.
I think Kelpie might have been on the Earthshot prize.
Yeah, that's right. And another really good example of a different type of business that we invest in would be a business like Renew Risk. So Renew Risk is a fintech business, or climate fintech as it's called. They provide data as a service to insurance companies to insure things like wind farms. So the problem with insuring wind farms is that nobody had accurate data on, things like hurricanes and stuff like that. So they're in this sort of speciality niche, but that's been a really good result for investors in that we invested in that business about a year ago, and it's already a 2.5x on the share price. So.
Oh, very good. And turning to exits, far too early to be talking about exits, but going forwards, how do you envision some of these companies exiting? Is it typically trade sales, would you say?
Sure. I mean, the first thing is that the exit environment for the within the UK for climate tech is really strong. So London is the leading city in the world in terms of climate tech inflows. More climate tech investment comes through London than any other city globally. 2025 looks like record M&A levels in the climate tech space. The leading market is still the US for M&A deals. Germany and UK, very close second and third. The exit environment is at the moment driven by corporates. So I think 81% of M&A deals are driven by corporates at the moment. And surprisingly, 1 in 4 M&A deals is oil and gas. So it's the oil and gas industry buying technologies to effectively decarbonize and clean up their own operations.
Oh, really? That's quite interesting. So I guess they're looking to have impacts to try and offset some of their carbon emissions.
Yeah. So a good case in point, for example, would be the company I mentioned before, Raft Energy. So you imagine a lot of the oil and gas majors are moving into things like biogas. And again, a suitable acquisition for them would be a company like Raft down the line.
So Matthew, turning to risks, how risky is this part of the market?
I mean, obviously, SEIS investing is risky. I mean that's we're talking about very early stage businesses, usually pre-revenue. So we have to make that statement, up front. But having said that, the reason we invest in 15 businesses is to give a lot of diversification in those tranches, and also we invest in many different types of business models. So if there's a particular sector that was under stress, the investors have quite a broad, breadth of opportunities within each tranche. I suppose I'm a little bit impartial here in that I'm an avid user of SEIS and EIS myself. So, I'm very aware of how they operate and everything else. So I suppose the way I look at SEIS in terms of my own tax affairs, and again, I'm not giving advice here, this is just my situation, but usually with SEIS, my downside is protected by about 70% with income relief and loss relief and
then more so if you can get the capital gains
deferral and so on. So from my point of view, it's an amazing tool because your downside is protected very well and your upside should be capital gains free if you're holding for 3 years or more. So I think it is always risky, and you should be prepared for companies to fail within the portfolio. But as a fund approach within multiple companies, I think it's a really strong proposition.
And so finally, to sum up then, Matthew, for those who are considering an SEIS fund this year, why should they consider One Planet Capital?
Well, I think first of all, the climate tech sector is one of the most interesting sectors to be investing in right now. It's a huge sector right at the beginning of its development, and it's really a kind of, a massive macro theme for the next 30 years or more. So that would be the main point. Within that, there's exposure to multiple different types of industries and models, be it software or hardware, and hardware and software and so on. I think the government support is a key point. I think it's really well supported in this country, and the UK does a really great job of supporting climate tech. It's a really good ecosystem here. I think the M&A environment is looking very positive moving forward, because inevitably big corporates are going to end up acquiring everything from carbon accounting, businesses through to energy technology, grid tech, whatever. So the M&A environment looks really, really strong. I think from a pure investment point of view, it offers a really good diversifier, because in general, most investors are software heavy, if it doesn't matter if it's the S&P 500 or indeed, EIS funds or whatever, there's just an awful lot of software around. And that's really been driven the market for the last 10 or 15 years. I think that the One Planet Capital SEIS fund will give really good diversification to investors, because there's so many different models there. And also the macro drivers for the fund are very different. So if there is pressure on B2B SaaS because AI starts creating issues in software models in general, we're not exposed massively to those changes. And then the final point is that I think the team we have at One Planet are really experienced. We've all been around the block. We're all ex-entrepreneurs. So I like to think we bring that value to the fund.
Some very good points. Well, Matthew Jellicoe of One Planet Capital, thank you very much.
Thank you, Jonathan.
If you're watching on YouTube, please press like or subscribe to the channel for more.